So in today's video, we're going to talk about how to get a bigger tax refund for LLC owners, for coaches, and content creators. So just a little insight on me. My name is Alan Pham, founder of AP and Associates, where we help coaches, content creators, small businesses go from taxpayer to tax saver by leveraging the tax code to the fullest extent. Now, refunds are given to people from the IRS that have withheld more money than what their tax liability is at the end of the year. So right around that time, April, when you're filing your taxes, most people think that they're getting a refund because, hey, the IRS is being generous, but they're actually not. You essentially gave the IRS more money than you should have, and that's why it's called a tax refund. So it's not extra money, just to give you guys an example, okay? So for example, if you made 100K in 2023, you're most likely going to be owing about $15,000 in taxes. That's just rough estimate ballpark numbers, but if you go through 2023 and you've paid 20,000 in taxes, then you'll get a 5K refund. Just simple math, all right? So we're going to talk about some simple ways that you can maximize a bigger tax refund. Now, the first thing is going to be the home office. Like I said, this is for business owners. So for anybody that is working at home and using their home office exclusively and regularly for business, then you're entitled to this deduction. Now, most people think, hey, we're in 2024, is this still highly audited? Most businesses are online, virtual. The case is not very likely, but there's still a chance of an audit if you're not documenting properly. So again, this is generally not available for employees, but for the self-employed. So you have to have a business. Even if you are sole proprietorship, you're still allowed to have this deduction. Now, depending on how aggressive you want to be, you can utilize the regular method to get a bigger deduction than the simplified. Simplified, typically you only get a $1,500 deduction, while the regular method you can go upwards of $5,000, maybe even $10,000 in a home office deduction, depending on how big the home office is and the utilities and expenses that are associated with that home office. And that's kind of dependent on where you live and how bougie you are. So next thing is the student loan interest, student loan deduction or student loan payments. They've actually started again, right? So over 40 million people in 2023 have student loans. Now you can deduct up to 2,500 in student loans interest paid from your taxable income. So for example, if you have had to pay 2,500 in student loan interest and you've made 50K, then you can take the deduction of 2,500 and you'll have to pay, or you'll get taxed on 47,500. Now, for example, if let's say you paid $5,000 in student loan interest, but you also made 50K, you are still going to be getting a deduction of 2,500. It cannot go any above, even though you paid $5,000 in student loan interest. 2,500 is the maximum. Next thing is a health savings account. Yes, this is actually one of my favorite strategies. This is great for anyone with or without a small business, as long as you have a high deductible plan. Now, I typically recommend this for people that are healthier and don't have as much medical expenses. Then this is something that we can utilize because you're not having to go to the doctor too often because you're healthy. You're not going to have to pay that high deductible plan. Now, if you are somebody that is visiting the doctor more frequently, your family does it, then the high deductible plan, that's something you would shy away from, and the HSA wouldn't make sense for you really. Now, like I said, the one of the three benefits really to the HSA is you get a tax deductible contribution on the way into the account, meaning these are tax-free dollars that you're not getting taxed on, like the after dollars of getting the money. This is not getting taxed on, so you're getting a deduction when it goes into the account. And then if you decide to make the account grow through investments, or letting the account do the investments for you, this is also tax deferred growth, meaning that as long as, hey, like you put in $1,000 and it grows to $5,000, you're not going to get taxed on that. And the last benefit is it is tax-free withdrawals for medical expenses. And this is super powerful because as you're growing and if you're a healthy person, you're not going to get those medical expenses down later in the line of your life. So you can actually build this account up, and every single year the amount you can contribute is adjusted based on inflation. But for 2024 individuals, you can contribute 4150 in a single year to this type of account. So 41,000 or 4,100, 4,150, you can go ahead invest that. And I've seen so many people do different things with this. They're, utilizing crypto. They're also, I've talked to different tax lawyers. Hey, one of them is utilizing, their HSA to invest in cows, which is pretty cool. And he had a 20% growth in about 6 months with the cows, which is also pretty cool. And if you're a family, you can contribute in 2024 8,300, which is essentially double the individual amount. And you're probably asking, what can I, deduct, or what can I use this HSA account for when I want to withdraw? So I've actually included a publication file too, 2023, but this will later for 2024, it'll release a little bit later in the year. But it'll actually tell you here, like, hey, like this is what you can use these medical expenses for: artificial limb, teeth, chiropractor, you know, home care, hearing aids, Medicare. This tells you a little bit more about it, and there's a lot of nuances to it. And I've actually seen some people even go ahead and get Cartier frames by utilizing their HSA, which is pretty cool. You just have to do a certain way, and I know it is possible. Next thing is the cell phone. This is a huge deduction that most coaches and content creators are missing. Just even small businesses, their cell phone is part of their business. Hey, this is something that you're utilizing to communicate with clients, you're utilizing to communicate with your team, or updating your CRM, shooting out messages. So the phone itself, you can deduct that in itself. Like if you're spending a new phone for $1,000, you can deduct that. If you're using your phone, your personal phone, 50% for business, then you can also deduct a percentage of that. Now, also, we want to be aware, because you're utilizing a phone, you're probably going to have a cell service provider, right? Your T-Mobile, Xfinity, whatnot. You can deduct that too. The extra storage that's needed, right? For my Apple iPhone, I pay like $10 a month to get additional storage with Apple because, it's already full and I got a lot of photos and videos. So required apps that you pay for too for your business. If you're using something like Mile IQ on your cell phone, track your miles for your vehicle, you can deduct that also. Again, you must determine the business use percentage. And, if you have two phones like Kevin Gates, then you can definitely, potentially utilize one of those phones as a business phone, kind of like he does, one for the plug and, one for the low. So that's just one of the deductions. And the last one is contract labor. This is something that, people with, the LLC owners, businesses, they have they have to work with, individuals outside of their business, as far as, hey, people that aren't their employees, to maybe design some sort of funnel, or, hey, I need you to go make a new logo for me, whatnot. You can hire those freelancers and independent contractors. You can do their fees as a business expense. Also, I want you guys to keep in mind, for example, if you guys are using like Fiverr, typically most of the time they will take a fee in order for you guys to work together. You can also deduct those fees. Now, that fee, can be anywhere from 5, 10%. I've seen some 11%. You can deduct those fees also because you're using a platform that's connecting, and hey, this is for business purpose. Obviously, full disclosure, it has to be for business purposes in order for you to deduct it. Now, also, one of the big things with contract labor is if you paid someone over $600 or more during the year, you require them to send them a 1099 NEC by January 31st of the following year. So since we're in 2024, so January 31st, 2025, you'll have to send this off to them just so that they can actually report it. And then before you give them work, or before you actually, make them sign the contract for whatever the work they're doing, you want to give them a W-9, W-8, depending on if they're in the country or not. But if they're in the country, W-9, just so that you can have some information that is equivalent to, hey, this person, I actually work with them. Because this is important because, hey, one person is getting the deduction, but then, who's the one that has to pay the taxes on that side where they're not getting the deduction, obviously, which is the worker, the freelancer, or the independent contractor. That is the whole side of contract labor. If you're utilizing people that are outside of your employees, you can obviously take those deductions. And thank you for watching till the end. I want to say also, there are so many more strategies, and these strategies are here. These are just 5, but they can get a little more complicated if you allow it to be. But it's good to best talk to a tax professional so that they can actually gear your situation and get an understanding of what you have or what you want to be a deduction, because hey, like, contract labor, hey, I might need a little more context if this person is actually a contractor or an employee, because they'll get taxed different, and then you'll also get taxed different depending on what you're doing with that person. Are you controlling their schedule? There's so many variables to that, but it's best to talk to a tax professional so that they can understand your situation, see if it makes sense to take this deduction, and see if there's any other opportunities where we can make those deductions. Now, if you want, if you have any questions and you want those questions answered, I do have a link where you can schedule a 15-minute consult with me and see if we can actually work together and see if it does make sense to potentially take those deductions so that you can get a bigger tax refund. And please don't forget to subscribe. Let me know what you guys want to see in the future.